We've repositioned ourselves as a low-cost producer, even in a global sense. We have a long life. We have great projects where we can further increase production. So I think we're well positioned. Pan African Resources PLC, we're a UK company, but we're South African based with all of our operations currently in South Africa. We have two large gold mining complexes, the first being Barberton Mines. We have the underground that we've been mining and will continue to mine for quite some time. And then we also have a tailings plant that produces ultra low cost ounces. So that's Barberton. The other complex is Evander that also produces very low cost and low risk gold ounces. And then we have an underground operation that we're also in the process of developing further at the moment.
You produce some exceptional numbers there. You've got to be pleased. So, what stands out for you?
Well, I think what stands out is the fact that we improved, number one, our safety performance in the year past. That's critical for us on a number of fronts. If we can't produce safely, we cannot produce. We need to take care of our people from a health and safety perspective. Safety first, health also very important. So without our people, we can't achieve what we've achieved in the last year. We have to continue to work on safety, but it was a good performance.
So you're going to be producing what, do you think?
Operationally, we exceeded our production guidance for the year past. That's obviously quite a positive. Actually, from all operations, we had an improved performance. We're guiding 185,000 ounces for FY20, which is quite a big improvement on the 172 that we did last year. We're saying 65,000 ounces from Elikhulu. We're saying 20,000 ounces from what we call the Evander Pillar project at the Evander Underground, and then 100,000 ounces from Barberton. So that makes up our increased production guidance of 185,000 ounces. To put $130 million into the ground in 12 months is not insignificant. So this plant can treat 1.2 million tons of material a month. And as I said, we produce now forecasted to be 65,000 ounces at an ultra low all-in sustaining cost in the year ahead. So that's what sort of demonstrates that you can get things done in South Africa. I'd like to say we're the lowest cost producer in South Africa as a group. Certainly, we're amongst the lowest cost at the moment. But not only that, we're also internationally very competitive. I think we came in at circa $980 an ounce. The international benchmark at the moment is just over 900. So 980 versus 900, not bad. And there is potential for us to bring down that cost further in the year to come.
You are striving to, drive towards that 900 mark, which is that kind of international standard. So you've clearly made some headway into that. What do you attribute that to, and how are you going to continue driving that lower?
I mean, the great thing with Elikhulu is it produces at an exceptionally low all-in sustaining cost. So we should be $650 odd, if not lower. We then have the Barberton tailings retreatment plant, BTRP, that does also 20,000 ounces. So overall, you have 85,000 ounces that are what we like to call pretty much ultra low cost. Just the mere fact that we have these ounces provides a stable base load, so to speak, for our portfolio. It allows us to survive pretty much in any gold price environment. And it brings down the group's all-in sustaining cost quite significantly. So we're looking to simplify the infrastructure. We're doing a lot more development, which allows us further access to high-grade ore bodies. We're looking at the marginal side of the business to see if we sort of cut some ounces, do we sort of bring down our costs. So there are a number of initiatives also ongoing to further reduce the all-in sustaining cost for the group. Our hierarchy of capital, the first is investing in our assets. So we have to continue to invest in our assets. Otherwise, we will not be able to continue to generate returns. The second consideration is balance sheet. So because of the project Elikhulu that we were constructing in the last year, our balance sheet is fairly highly geared, certainly more than what we'd like to see. So in the next year, we'd like to repay quite a lot of the debt we have sitting on the balance sheet. And then thirdly, it is providing a cash return to our shareholders in the form of dividend. We are proposing a dividend for approval at the upcoming AGM. I think that's positive. We had to suspend the dividend last year as a result of obviously gold price, what was happening at Evander, the substantial capital we were incurring on the construction of Elikhulu. So I'm quite happy that the dividend is back, albeit at a more modest level, but it's still, so 1% yield is not to be frowned at.
what's also important is driving that share price, right? So you have, had your share price affected, like a lot of people, to be fair, but what are you doing about it?
If the share price does badly and we continue to sort of fret and worry about the share price, that doesn't really get us anywhere. So, we have a saying that we focus on those things we can control, and then the share price will take care of itself, as it has done to some extent. We've repositioned ourselves as a low-cost producer, even in a global sense. We have a long life. We have great projects where we can further increase production at fairly benign investments. So I think we're well positioned. We're a safe producer. We're investing into our communities. We're making a difference where we operate. So I think all of that makes for a good mix.
Mining is tough. Mining in South Africa is tough.
So South Africa has a fairly negative perception, I think, internationally. And some of it is justified and some of it potentially is not. So we have a long history of mining, certainly gold. I think more than 50% of all the gold that's been mined in the world has come from our country. We have great infrastructure, so we have access to power, we have access to technical skills, we have a good constitution, we have a good legal system, etc. But then, you're faced with the cons also. You have unemployment, the economy is not doing great, there's uncertainty in terms of mining legislation, we have power challenges, electricity issues. So that sort of makes for an interesting mix. You have to accept that mining in Africa does come with challenges, and you have to equip yourself and skill yourself to be able to deal with those and be successful and operate successfully and sustainably.
There have been some disturbances, in country, and one of your sheets talks about arrest rates. What's that? Why declare that? What's that got to do with your ability to mine?
Well, illegal mining is a serious issue, and not only in South Africa and the rest of Africa, but you do find the guys being in South Africa quite militant, aggressive, armed, and it's meant that we've had to up our game a little bit. We've had to professionalize further. We've spent a lot on security in the last year, more so than in years past, and that's to protect our assets and to make sure that we can continue to mine safely. As you point out, we've been able to mine successfully in South Africa for many years. We've been able to bring great projects online in South Africa in recent years. It demonstrates that we have the ability to operate.